Hello friends, in our previous lecture we have completed sum number 6. Now before going to sum number 7, we are starting a new method, that is reducing balance method. As I said that from sum number 1, 2, 3, 4, 5, 6 there is a sums regarding straight line method, and sum number 7, 8, 9 are regarding reducing balance method, and 10 and 11 are not included in our course. And in that also sum number 1 and 2 also will not be included in our course because they are not sums which is regarding exam. So regarding exam, from sum number 3, 4, 5, 6, 4 sums, 3, 4, 5, 6, 4 sums are regarding straight line method, then 7, 8, 9 are regarding reducing balance method. So first we are now writing what is about reducing balance method, because in straight line method every year depreciation is remaining same, but under reducing balance method depreciation will not remain same. So what is there, we will write. Reducing balance method. So we will write, under this method, comma, depreciation will be calculated on remaining balance of each year, so that every year amount of depreciation would decrease. Okay, under this method depreciation will be calculated on remaining balance of each year, so that every year the amount of depreciation would decrease on a given percentage, comma, depreciation would be okay. Only this much we have to understand, that depreciation will decrease every year. In straight line method always we have calculated on cost price. Now here we cannot say the cost price is a base, because always depreciation will be calculated on the remaining balance. So here cost price is not required. Okay, so these are the things you have to write. Now we are starting sum number 7. So write this thing in your notebook, and now we are going for sum number 7. In sum number 7, again we need to prepare all the things. Okay. Sharma Limited, on page number 67. Sharma Limited has purchased a machine for 67,000 on 1/4/12. Installation expense was 3,000. Depreciation is to be provided 10% every year under reducing balance method. Ascertain the amount of depreciation. Pass journal entries. Prepare machinery account and depreciation account for first 3 years. Show accounting effects for first 2 years. Everything we need. Okay. So first sum is same. We will start writing the accounting years. Question number 7. Accounting years. In that, first year 1/4/12 to 31/3/30. Second year 1/4/13 to 31/3/14. Third year 1/4/14 to 31/3/15. Now important dates. On 1/4/12 purchase the machine. Here in the sum only one machine is there, so I am not writing first machine or second machine. We are purchasing the machine and it is not sold. Okay, machinery is not sold till the last date, so we have just calculated the depreciation. Depreciation is 10%. Depreciation is 10% under reducing balance method. So now friends, you will see how we will calculate the depreciation. Okay, simply we will give the heading machine, not first machine or second machine. Okay. So purchase price on 1/4/12 67,000 plus expenses, all other calculations are same, 3,000. Cost price on 1/4/12 will be 70,000. So I am not writing cost price as a base because it is reducing balance method. Okay, so we are in 1/4/12, just we need to calculate the depreciation 3 times. So minus depreciation on 31,330. Now how much? 70,000 into 10%. How much is the balance? On that we will calculate. So it is 7,000. Now balance on next day 1/4/13 will be 63,000. Okay, how to calculate which is the balance written? Calculate 10% of it. Again, now second year is completed, so minus depreciation on 31,340. Now depreciation will be on 63,000. Normally in the previous sums depreciation is always on 70,000, that is the cost price. Now it is not like that. Now the balance is 63,000, so 63,000 multiplied 10% is 6,300. Now balance on next year 1/4/40. 63,000 minus 6,300 is 56,700. Again minus depreciation on 31,315. Now it will be on 56,700 into 10%, which is 5670. Now balance on 31,315 only, because now there are no years. 51,030. So friends, I hope that you all have understood what is the difference, that always depreciation under straight line method is calculated always on 70,000, means always on cost price. But in reducing balance method, always we have calculated the depreciation on the remaining value which is upside. Okay, here there was 70,000, so 10% of it is 7,000. Here it is 63,000, so 10% is 6,300. Again 56,700 into 10%. Now what we have to do? First journal entries for 3 years, then machinery account and depreciation account for 3 years, and then accounting effect for first 2 years. So let's start. So now I will give the heading journal entries. Date, particulars, L, debit, and credit. And I will give the heading first year. Now as you know about the journal entries in the first year, first we will purchase the machine, then depreciation, then close depreciation. Now for purchasing the machine, machinery is coming in, so machinery account debit, its purchase price will be credited to bank, expenses will be credited to cash. So 1/4/12 machinery account debit to bank account to cash account. Okay. Machinery account will be of total amount 70,000. Bank will have its purchase price 67,000 and cash will have its expense 3,000. Being machine purchased. Being machine purchased. Then on end of the first year 31/3/13 we will calculate the depreciation. So depreciation account debit. Depreciation account debit to machinery account. And the amount of depreciation for first year is 7,000. Now see, depreciation will change at every year. Okay, so that thing you should know. Being depreciation calculated. Now while writing in narration, write short form of depreciation, DEP. Being depreciation calculated. Now at the end of first year, that is 31/3/13, we have to close the depreciation account and transfer to profit loss account. So profit loss account debit to depreciation account. All the rules, all the journal entries will be same, only the amount of depreciation is changing. Okay, every year only, that is the change in this method. Otherwise the sum is same. Okay, being depreciation closed. So first year is over, so we should make a line. Don't take total. Then give the heading second year. Now in second year only depreciation is calculated. So 31/3/14, that is the end of second year. Again entry is depreciation account debit to machinery account. Now the depreciation is 6,300. Being depreciation calculated. Again 31/3/14, close it. Profit loss account debit to depreciation account. Now 6,300. Again this is also over. Now for third year. Third year also same, because machinery is remaining, we are not selling it. So 31/3/15 depreciation account debit to machinery account. Now it is 56/70. 56/70. Being depreciation calculated. Now the last date 31/3/15, close it. Profit loss account debit to depreciation account. 56/70. 56/70. Here narration is left. Being depreciation closed. Here also being depreciation closed. Okay. Yes. So journal entries for the first 3 years are over. Now machinery account and depreciation account. That is date, particulars, JF, amount, date, particulars, JF and amount. Now make it for 15 lines. And with that depreciation amount. Make it for 10 lines. Okay. We already know that if there are journal entries not present, then also we can prepare the machinery account. How? We have to just look the dates. That in first year is this much, and in the first year we are purchasing the machinery is coming in. So on debit side, or you can see the journal entry and you can post also. So on 1/4/12, machinery is debited and to bank and to cash, to bank account, to cash account. Bank account will have its purchase price 67,000. Cash account will have its expense, that is 3,000. Now in the first year nothing else is done, only depreciation is calculated. You can see the journal entry, or you should know that depreciation will always be credited. So on 31/3/30 by depreciation account, as depreciation is debited, machinery is credited. By depreciation account, amount for first year of depreciation 7,000. There it is credited, so here it should be debited 31/3/30 to machinery account. Amount is 7,000. Now we should close the depreciation first. On credit side, 31/3/30 by profit loss account 7,000. So this will be equal on both the sides. Then close the machinery account 70,000, 70,000, 63,000 will be the balance, or you can see here also by balance carried down. Okay. Then again leave one line and starting of second year to balance brought down how much? 63,000. Again in second year nothing is done, only depreciation is calculated. So on credit side 31/3/14 by depreciation account. Now the second year depreciation is 6,300. There it is credited, so here you would be debited 31/3/14 to machinery account. Now the amount is 6,300. Again depreciation is closed and transferred to P&L account, profit loss account. Short form of profit and loss is P&L 63. Again the totals are same and it should be shared. Here we will close 63,000, 63,000, 56,700. By balance carried down. Again on the third year 1/4/14 balance brought down 56,700. Again in the third year also machinery is not sold, simply depreciation is calculated. So on 31/3/15 by depreciation account 5670. There it is credited, here it should be debited. 31,315 to machinery account 5670, and here it should be closed by profit loss account. By profit loss account 5670. Again it is same, so 5670, 5670. Now we should close this account. 56,700, 56,700. By balance carried down 51,030, which you can see here also. Okay, so calculation is done. Journal entries for 3 years are also shown. Machinery account and depreciation account is also shown. Now you read the question again. Ascertain the amount of depreciation, means each year's depreciation we know 7,060, 356, 70. Then past journal entries and prepare machinery account and depreciation account. So journal entries for 3 years, machinery account, depreciation account is also there. Show accounting effects in annual accounts for first 2 years. Okay, now which I am showing here. Okay, so first the calculation, then journal entries, then account, then depreciation, then now come here. Okay, now here I will write accounting effect in annual accounts. First year, that is from 1/4/12 to 31/3/30. Profit loss account as on 31/3/30, which you prepare only for one line, nothing will come there. What will come? This journal entry, profit and loss account debit. So debit side of profit and loss account to depreciation account. Depreciation account, first year's depreciation is 7,000. And one more, balance sheet is required. Balance sheet as on 31/3/30. See, I am not rubbing the board. The reason is for comparing all the things. Okay, I don't have any problem in rubbing. Now this is assets and this is capital liability. And as you know, machinery is to be shown on asset side. So asset side machinery 70,000. How to show in first year? The purchase price and expense including cost price is 70,000. Now first year's depreciation is 7,000, which you need to subtract, or from here also. Minus depreciation 7,000. So machinery will show 63,000 in first year. Machinery will show 63,000 in first year, in here also, in our calculation also, and in our final accounts also. Now for second year. Second year, which is from 1/4/13 to 31/3/40. Again, profit loss account as on 31/3/40. Again, profit and loss account debit to depreciation account. So here on the debit side to depreciation account. Second year's depreciation is 6,300. Now in balance sheet as on 31/3/40. So this is capital liability. And this is assets. Now, machinery. Yesterday also I have said yesterday some also we have given annual effects in 3 years. So bring the balance of previous year here. So machinery 63,000 and current year's depreciation you subtract minus depreciation 6,300. So it will be 56,700. Here also, and here also. This is the reason I am not rubbing the board, because I need to show you each and everything. I need to show you each and every calculation, so I have prepared in this way. Okay, how we have started, friends? First we have started with the reducing balance method. That under reducing balance method, the depreciation is going on decreasing every year, which you can see the best example. Then we have done the calculation. Every year depreciation is not calculated on cost price but the balance. After that they are asking the journal entries for 3 years, which we have shown. After that machinery account for and depreciation account for 3 years, which you have shown. Now effecting annual accounts, for that you need to prepare profit and loss account, and this entry will be posted profit and loss to depreciation, so on debit side to depreciation. Then you will prepare balance sheet where this side is known as capital liability and this is known as asset side. On asset side, machinery will be total amount of first year is 70,000, or you can see from here also 70,000 minus the depreciation which was here 7,000. So 63,000 balance is here also, and here also. There are 3 places to check. Then afterwards in second year, which is from 1,413 to 31,340, again profit and loss account debit to depreciation account 6,300. Again take balance sheet, capital liability and asset side, and in that this 63,000 is balance of first year, which is to be brought here. Here also balance 63,000, here is 63,000, here also 63,000. Now again the depreciation 6,300. So 56,700 balance is here also, and here also. So it is easy to compare. Okay friends, now we are left with only 2 sums. That is sum number 8 and sum number 9. After that our chapter will be completed. So I hope that you all have understood the reducing balance method. That's all for today. Thank you so much.